Hello and welcome. In this explainer, we're going to document a pretty fascinating market cycle. We'll be doing this using a method called market DNA. Our focus today is going to be on silver, or XAG, and specifically, we're tracking a cycle that's been identified as XAG_2_3. Now, our role here is just to be neutral observers. We're simply going to narrate the events exactly as they happened. So let's dive in and walk through it phase by phase.
So, here's our game plan for today. We'll kick things off with a quick look at the market DNA method itself. Then we're going to trace the three key phases we've seen so far in this cycle. First, the initial entry and plan, next, the mirror contact event, and then the end-level event. Finally, we'll wrap it all up with the current status and, of course, some important disclaimers. So, what's the deal with market DNA? What makes it so different? Well, it's a proprietary system, and it's built entirely on geometry. As you're about to see, it intentionally leaves out a lot of the usual tools you might be familiar with.
Okay, and this is key. There's no technical analysis here, no fundamental analysis. You won't find any standard quantitative indicators, no Fibonacci ratios, no Elliott waves, and no common chart patterns. Instead, our focus is going to be purely on the geometric structures you see. We're just going to observe the events and shapes by the labels they're giving within the system. Think of it like we're just narrating a unique visual language for the market.
All right, let's get into the cycle itself. We're starting with phase 1, the entry and plan. You could say this is the foundation for everything that follows. This is where we'll see how the entire roadmap was laid out, everything from entry points to risk parameters and even the final targets, all of it before the first move was even made.
And there it is, the starting gun. On February 5th, 2026, the price of silver hit exactly $65. As you can see right there on the chart, this triggered the primary entry level, which is labeled M. That single event is what officially kicked off this entire documented cycle.
Now, this part is really interesting. Right from the very beginning, a complete risk management plan was defined. It was all based on a hypothetical $100,000 portfolio, and the absolute maximum drawdown was set at 10%. But what's really unique here are the system's own specific parameters. You see things like trapezoid time duration and third triangle domain. These are specific inputs that the market DNA method uses to calculate all its risk and its position size right from day one.
So how exactly was that position size determined? Well, this quote from the documentation explains it perfectly. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. And following that formula, the system resulted in a calculated size of 0.01 for each of the two potential trades. But the forward planning didn't just stop with risk. The entire exit strategy was also fully defined from the start. You can see the three predefined price targets, T1, T2, and T3. And the system even mapped out two main scenarios. There was one plan for if only the first entry at M was triggered, and a completely different scenario if the price happened to drop all the way to that second entry level, PC. So basically, every major possibility was already accounted for.
Okay, so with the plan set, the market started to move. And that brings us to the very next documented milestone in this cycle, phase 2, which is known as mirror contact.
Just a few weeks later, on February 22nd, the price action reached a key geometric boundary. You can see it right there on the chart. The price came up and touched the mirror delay line at nearly $86. This precise contact is exactly what the system defines as the completion of phase 2. All right, so after that mirror contact, the cycle continued to develop. This brings us to the third documented stage we're going to look at, phase 3, the end-level event. And this brings us right up to the present moment. On March 1st, the price hit another critical point within the geometric structure. It reached apex N at a price of $94.65. This event marks the completion of phase 3. Now, what's really important to see on the chart is that the price rallied to this point without ever dipping down to that secondary piece of C entry level from the initial plan. So this is where the cycle stands as of today. Okay, that brings our documentation right up to the present. So to conclude, let's just quickly review the current status and go over some mandatory disclaimers. Please take a moment to really take note of the following. This presentation is for documentation and for public verification purposes only. This is not financial advice. The methodology itself specifies that any leverage above 10 is prohibited. You should never invest essential personal funds. And finally, any risk management must follow the provided instructions precisely. So, to recap everything, the cycle has now successfully moved through 3 distinct phases. It is currently active, right after that end-level event we just saw. According to the system's original map, the final milestone would be Phase 4, completion, at the trapezoid top. Our job from here is just to keep observing. We'll continue to document this cycle as it unfolds. Thanks for joining us for this explainer.